Um, Politicians are going to do what are going to do. We're going to take care of our clients. So I'm going to show you kind of all the different types of plans out there. I know there's lots of opinions about what is a legit plan, what's a good plan, what's not a good plan. I still think it's an individual thing. I think it's an individual decision between your client and what they want to do. I don't think you should make the decision for them. I do think you need to be smart in what you sell and how you sell it and present it. So, as we're going through this, I will talk about the different ones. We'll stop to answer any questions about that specific type, and then we'll move on to the next one. So, any questions, throw them in the chat. I will attempt to get to them. All right, I'm going to share my screen. Sharing PowerPoints is always weird to me, but all right. In theory. All right, can you see my screen? Preparation for what is coming. Uh, Make sure I can see and somebody's checking in. All right, so what is coming as far as we know? Everything may change, but this is what we know for right now, right? The income cliff is returning for 2026. I did talk about this earlier about really knowing that cliff and how much money people can make over the cliff and be put in a bronze plan and go into an HSA and still qualify for a tax credit. That is still my go-to way of getting people qualified, especially when they're on the border. So if you haven't seen that, go on the YouTube channel and look up the HSA class because that's really, really important. The cliff for a single person is 62,600. If somebody comes in and makes 64,000, are you just going to go, sorry, you don't have, I can't help you? Or, oh, all right, you're going to go put some money in an HSA, it'll lower. So get your cliff. The federal poverty level charts are out. By the end of probably week 1, I will have those numbers memorized and then know where that HSA is. So if you haven't seen it, go on to YouTube. I really deep dive into how the HSA is going to work. So if your income, yours or your clients, is going to be higher than that cliff, we have some options. There's, like I said before, there's varying opinions on which ones are better. I'm not going to make that decision for you. You figure out for you what works. And I kind of think everything out there, there's probably somebody that it works for. It just seems to be that way. All right. Things to be aware of for people, you or your clients that are over the income cliff. Are they healthy? Short-term plans, indemnity plans, underwritten plans, share plans. If you're not healthy, full price, simple underwriting, maybe, depending on the type of not healthy, or, lower income. Well, these are people that are higher. They're going to go without. So I want you to think about some of that when we're looking at some of these plans. There are some that are maybe not great. Maybe they're not perfect, but they cannot afford full price. They just can't. I had somebody in my office a couple days ago. They just can't. I mean, they are crossing their fingers and really hoping the cliff comes back or the income cliff goes away because they cannot afford it. Okay, maybe I don't have the perfect plan for them, but even the not perfect plan is better than nothing, right? I'd rather somebody had just coverage for a hospital stay than to walk around going, I have nothing. All right. Oh, a couple more people join. All right, first one, short-term plans. These have gotten a bad rep, mostly from consumers not understanding how they work because either they just didn't hear their agent or the agent didn't really understand how it worked. And then politicians hear about these junk plans. This is usually what they're talking about is short-term plans. Right now, for the most part, there might be exceptions in your state. There are 3 main carriers for short-term plans: Allstate, United Healthcare, and Pivot. So Pivot is the only one who's not actually a carrier. Pivot is the third-party people who handle 3 different carriers. There is IHC that was around for a while, but I haven't seen them, so I don't know if they still exist. And you may have somebody in your state. We used to have one of our insurance companies had a short term that one of the ACA plant companies also had a short term. So short-term plans originally were created for a short term, right? You lose your job. It's going to be 3 months before you start your new job. Oh, okay. We're going to get you something just in case. That's really what they're meant for. They're really meant for just in case in a very short amount of time. Most people didn't even sell them, didn't never even heard about them until and short term was not available the last time we were in this situation where the income cliff mattered. Um, and then Trump came and he released it, and then it went back, and it's uh, all kinds of controversy. Politicians don't necessarily understand how it works, but it can work. It works really well for a 26-year-old who makes decent money. They don't go to the doctor. They're probably going to go because of an accident, and it costs them $150 a month. The marketplace is going to cost them $350 a month. So you're like, wow, right? Like it doesn't really make sense. Short-term plans are, I think, brilliant for somebody who's turning 65 in March, April. And they don't want to worry about the income. They just want to sign up, get their get something catastrophic and get to Medicare. So short terms can work brilliant for that, especially if they've been trying to keep their income low for the last couple of years and they couldn't wait to turn 65 and not worry about income. Your state, learn your state's rules. In Wisconsin, they can have a short-term plan for 364 days. I know states like Washington, I think it's 3 months, maybe it's 4, and then there's some other states that have it for 3 years. So you can learn it, your state, go to the carrier, try and write up a plan, you'll see exactly what happens. They do not cover pre-existing conditions. There are some guaranteed issues. I know Allstate has a guaranteed issue short-term plan, but it's not going to cover pre-existing conditions, and it's significantly more expensive. If they need to have a baby, it doesn't cover that. Now, Allstate will have a child-only short-term plan, but they need to be more than 6 months old. So they're not available everywhere, but they are great for that just in case. If somebody in the middle of the year comes to you and they didn't have health insurance and now they're like, oh, I need health insurance, we can't get them on the marketplace. A short-term may be the thing that you can get them for. And relatively speaking, they are less expensive. The thing to be aware of them is the deductible and max out of pocket. This is where I think a lot of the problems have happened. Often, the deductible says 10,000. The out of pocket says 20. It's actually $30,000 before they have reached their full max out of pocket. They're not like your typical health plan. You have to pay attention. Some people have the money that are like, fine, 30,000, whatever. Most people don't. So the plan, here's kind of a side-by-side plan of what it looks like, or an example of one. So North River, this is a pivot one. Epic, it's probably the one in Wisconsin we use the most. This one is unique. It does say individual deductible, 364 days, that's Wisconsin. Coinsurance, that's the thing you have to look at. Does the coinsurance say 20%, 50%, 30, or 0? If it says 0, then the deductible and the total max out of pocket are the same. They both are 5,000. But if that one says 20% and the deductible is 5, then this plan would actually be 10,000 out of pocket. So please be aware of that. I like selling one where the max and the deductible are the same, but those tend to be a little bit more expensive. United Healthcare has a nice one that has a max out of pocket and deductible of 7,500. Because I've had people that the 5,000, they're like, I can go more than 5. I can pay a little more. So then I go to United and that one's cheaper because it's a 7,500 out of pocket. So really pay attention to that. And it is not a high deductible health plan. I don't care if their deductible is 10,000. I've had clients come in that somebody else, an agent and or their accountant, told them, oh, yeah, that deductible, that's a high deductible. Go put money in your HSA. Even with the big, beautiful bill, it's not an HSA qualified plan. It has to say it's an HSA qualified plan. I know Allstate does have an HSA qualified short term. But unless it says it on there, it's not a qualified plan. So any questions on short-term? You can unmute yourself or put it in the chat. I'd like to know before I move on if anyone has
Yeah,
questions.
Chris, on the 364 days, what do we do with that additional day that's lingering out there?
So I enroll people on January 2nd or January 3rd if it's leap year, so that when they start, it gets them through the entire year. And I enroll them in a marketplace plan, full coverage. If something happens, this is the thing to remember too on the short-term plans and the other alternatives. Somebody today comes in my office and I'm like, all right, next year, this is what we're going to do for you. And they're like, yeah, this works for me. I can actually write them for January 2nd. But anything that happens between today and January 2nd will not be covered by that short-term plan. So I will enroll them in a marketplace plan, the cheapest one, full coverage. I don't apply, I don't put income in there, and they get the bill and I say, just hold it. If nothing happens, you just throw it away. The plan will cancel. If something happens, you're going to pay that premium. You're going to call me. We're going to cancel the short term. So do you guys understand that short terms do not cover pre-existing? Anything that happens before the plan goes into effect will not be covered. And I've been doing this for quite a few years. I've only had to have that emergency happen once, but I'm going to tell you that saved her life. So she ended up, a lot of short terms don't cover prescriptions. She had she ended up having a major cancer thing. So it was one of the one people. So most of the time you're not going to do it. You have to remind them, don't pay it. You're not going to be sent to collections. It's a full price plan. It'll cancel. You never effectuated it. So that's what I do. Anyone
Chris,
else?
I have a question.
Sure.
Can you speak on who would be like the ideal candidate for a short-term plan versus an ACA plan?
Sure. So one, price, obviously, if somebody can get on the marketplace for $100, put it there. Typically for me, I see it's the younger, healthy person who doesn't go. That's a great person. I always add an accident rider, by the way, always, always, always on these short-term plans. And even on this one where it's a 5,000 out of pocket, read the small print. We found out recently that they only pay 10,000 towards a joint surgery. And so the man paid 5,000, 10,000 from Pivot, and he had a $5,000 accident policy, and he's still on the hook for more money. So we are now adding a $10,000 accident on these ones. So always add an accident rider because that's who you need to get. And again, like I said, somebody who's turning 65 and is healthy, obviously they have to be healthy and doesn't need ACA for a whole year. They're just going to need it for a short amount of time. And they're like, I don't have any doctor's bills. I don't have anything set up. I do typically tell people if they use this and they need somebody who just is healthy, statistically year after year, they don't use their health insurance or they only get an annual. I go ahead, use this and don't pay cash for your annual. It'll be cheaper. I don't even have them use this to pay for their annual. It'll give me $100. Well, maybe you're going to get charged a whole lot more, right? The doctor's offices will charge more if you have insurance than if you just do a cash rate. Any other questions?
Yeah. Can you explain what you just said before about the two plans, that little switcheroo?
So yeah, so if you have a state if your state will let you do it from January 1st to December 31st, you're fine. But if you have a state that has, like mine, 364 days, we're leaving them exposed for one day. I'm either leaving them exposed January 1st or December 31st. Well, I can get them coverage for January 1st. I can't get them coverage on December 30th for one day of sickness, right? So if heaven forbid, at the end of the year, they're sick, they're in the hospital, something's happening, one day they have no coverage. So I enroll them in this plan. They pay for the short-term plan. It's ready to go January 2nd. But if anything happens between the day I am filling out the application and January 2nd, the short-term will no longer cover them. So I also enroll them in the marketplace for the cheapest bronze in their area, just in case something happens from the day I do the application to the day the short term starts. 99% of the time, nothing will happen. But if they break their leg on December 31st, the short term is not going to cover them. They're going to need to pay that premium for January, get their leg taken care of, get handled, cancel the short term. You'll get your money back, cancel the short term. And then if it is something like a broken leg, I've done this. When they were all done, everything was fine. We turned off the marketplace and signed them up for a short term in May. I've had people, especially in previous years, where short term was the only option, and we kind of swapped them back and forth, back and forth, back and forth. They're like, you know what? I want to get my annual now, especially women. If you're doing a mammogram, colonoscopy, pap smear, that costs way more money than just your physical. So we signed them up. They paid full price for January, February. Husband and wife, they went and got their annuals. They had their colonoscopies. They had all of that, clean bill of health. We enrolled them in a short-term plan in March for the rest of the year, and they paid full price for the ACA for those first couple of months. That is also an option. You know, if you've got people who are willing to, you know what, let's hold off. I'll pay for the ACA and see what happens at Congress. Okay, you can do that. One of the positives of short term is you can enroll them at any time before something happens. So hopefully that made sense.
Yeah, and
All right.
Yes,
Yes,
thank
before
you.
we move on,
You're-
is there, oftentimes the plan will now be canceled without the binder payment. So when you say hold off, don't pay the bill, how does that work on the ACA plan?
Exactly. It won't be effectuated. There's a grace period. If you don't pay by January 1st, they're not canceling you January 1st. You have a grace period.
Are we talking
Minimum a week.
off
You've never
market?
noticed, they always give you 30 days to get that first one in.
Off marketplace or on the exchange?
Both.
Okay.
You have a grace period to pay it. If you don't pay it by January 1st, they usually give you to the 5th, the 6th. And I think Molina, I've seen it every year. They're like, we must have it by January 15th. And then January 15th comes around and they send out another email saying, hey, well, we're giving you till the 30th. So you do not have to pay before January 1st. There is a grace period. But if they don't pay it, it will cancel and it will never go into effect. And they didn't lose anything. They're not going to collections. They're not going to get in trouble. They don't owe any money. They didn't pay the bill. So they never actually started the plan. And if you're doing that with a carrier that they are currently with, make sure they turn off their auto pay. So if they're with United Healthcare this year, they got a marketplace with a tax credit and they have it set up for auto pay. You go, all right, you're going to go in, turn off that auto pay, and I'm going to go into your marketplace application and get rid of all the income stuff. And just make sure you're enrolled. We'll just let it auto renew. Just let it auto renew. If they don't pay for it, it will terminate back to January 1st. Right.
Chris, on the
Yes.
auto renew part though, they do have to call in and cancel it or it's going to keep charging them, correct?
That's why you want to turn off the auto. No, you want to turn off the auto pay.
I know, but
It
Oh,
will
I
only keep
remember
charging if they have tax credits. There's a 3-month grace period if
Okay.
you're getting tax credits. There's a 7-day grace period if you're not, sometimes 30. So it's going to automatically cancel back to January 1st.
So what I'm referring to is before I ever got into this ACA and insurance and everything, probably 10 years ago, I had my own, and I know I've seen this happen with a couple of clients, but I had my own and it went over and I thought it would automatically cancel if I didn't pay for it. And it didn't. And Blue Cross wanted like January or February or whatever.
They can want all they want. They can't require you to pay it.
Okay. It
You are
made it
not
sound
legally
like,
obligated to pay for health insurance.
okay.
They are legally obligated to cover you if you keep paying, right?
Uh-huh.
So
Right.
the ACA is different. So the ACA, the carriers have to give them a 3-month grace period if they collect a tax credit. If they don't collect a tax credit, in my state, most of them are 7 days. If they don't get that payment by the 7th of the month, they just cancel it. Now, there's a couple exceptions that will give them 30 days. But it's a new plan. It's a new effectuation. It's new start. You know, you may be moving them from maybe they're in plan number 3 of that carrier, and you're putting them in the cheapest plan. Like they're paying full price. They want to be in the cheapest bronze possible. So that's even a new plan. So, you know, but it will cancel. It will backdate. Now, and they may get a February bill just because they're giving them 30 days to get that January payment in, and they, they send out the bills January 15th for February. You go, no, 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 just ignore that, and then it'll just backdate. It'll cancel.
Can they, or do you or me, whoever, like call us back on January 1st or 2nd, say, okay, you can cancel it now? And then,
No, because if you cancel it then you end up owing. I mean, you could cancel it one day, but then they're gonna have to pay for one day. Let it
gotcha.
auto
So
cancel.
let it- Okay, that's why you're doing that. Okay,
Yeah.
gotcha. Thank you.
And somebody asked, how long can they have a short term without using it before getting a refund? Most of them, it's 30 days. They have, if they buy it January 1st, they can decide on January 29th that they don't want it. So there's usually a 30-day. People call every February, March because they never paid January, and it backdate cancels it because it's never effectuated. Yeah, if you don't pay for it, they're going to cancel it. But that initial one, like I said, Robert, most of them give them 30 days. They don't have to give them 30 days, but 90% of the carriers choose to give them 30 days when we're going into a new year. It just that they choose to do that. You make the effective date for a short-term plan whenever you want. So somebody asked, what's the effective date? You can do it tomorrow. That's the other nice thing about short-term. Somebody walks into my office today, they don't have insurance, and I'm like, well, let's get you started for tomorrow through the end of the year. So you can start short terms any day of the month, just not today. Also be aware, short terms will not cover sickness for the first 7 days. They'll cover an accident, but if you have the flu and you get a short term, you can't go to the doctor. So they're not going to cover a sickness for at least 7 days. All right, moving on to indemnity plans before we run out of time.
Okay, sorry, go ahead.
All right, indemnity plans. This was the only plan option in 2018 and 19 when we were going through, or 20, yeah, when we were going through some of this when the cliff was a big deal. Companies like Manhattan Life, Allstate, I think Pivot has one, United Healthcare has one, Philadelphia American Life has one. There's lots of indemnity plans out there. It's a type of health insurance where the insurer pays a predetermined amount. So it's not a percentage often. It's usually, we're going to give you $80 to go to the doctor. And they may say you only get 10 doctor visits. Well, it doesn't matter what the charge is. So if you go to a chiropractor for 40 bucks, you're going to get 80 bucks. Well, there you go. Now you can pay for 2. But if your doctor bill is 300, you're going to get $80. So it's a fixed dollar amount. They have limits on what they're going to pay, but there's no max out of pocket. This is one of the biggest issues for me, is at least with a short term, even if it's $10,000 or $20,000, they're going to reach that 20, and then the insurance pays the rest. With an indemnity plan, that does not happen. What the indemnity does is they keep paying until you reach the benefit limit. Most of them are $1 million. In a lifetime. Some have 3. So again, each one's got its own little nuances. But there isn't a max. There isn't a, oh, I got something really big and now I don't have to pay any. You will continue to pay. Potential for balanced billing. Because the providers don't really have contracts with indemnity plans. And again, every state's a little different, but you can get balanced billed. I went through this myself. I had an indemnity plan and I ended up in the hospital and had surgery, and I still paid about $20,000 out of my own pocket. Now I saved $20,000 in premiums for the previous 4 years because I had a family of 3 and would have had to pay full price, but I'm not doing an indemnity plan again, not by itself. It should never be by itself, just so you know. It should always be stacked with stuff. The nice thing though is if somebody likes this plan, I mean, I had some people who were on this from back in 2018 and just kept it because it worked for them. It can work really well if you don't go to the doctor much. So it can be a good plan, but the out-of-pocket can be quite a lot if they don't have other layers. This is what an indemnity plan looks like. Don't ask me which one this is. I can't remember, but there's your Metal Gap, Core Plus. A lot of times you'll see 1, 2, 3. Typically, level 1 means they are going, the insurance company is going to pay 1 time the Medicare rate. The second level is 2 times the Medicare rate. The third level is 3 times the Medicare rate. Or they're saying right here, you're going to get 5,000 for that surgery, up to 4 surgeries a year. A hospital stay. So there's different types of how these work. So this inpatient hospital, you get $2,000 for arriving, and then you get $4,000 for being in the hospital. I can tell you, it's more than 4,000. So that's why you want to have an accident policy on top of this. You want to have a critical illness policy on top of this. But again, if this is the only thing they can afford, it's still better than nothing. Every indemnity plan is different. Like I said, whoever your favorite carrier is, United Healthcare is a known name, right? Allstate, you can layer it really easy right on there. Same with United Healthcare. Manhattan is a known name. Philadelphia American Life. So they all work the same. It's just the details that you're going to have to look. I mean, $8,000, $9,000, $10,000 for surgery. Okay, that's not bad, especially if it's an outpatient one. But now you have surgeon outpatient, it's only 5,000. So you got to read that print. A lot of times your clients are okay with this as long as you show them the gaps. You have to show them the gaps. Typically, I like to add a MEC policy on this. So minimal essential coverage is what MEC stands for. MEC policies came out when the Affordable Care Act was originally started. There was a penalty. If you did not have a qualified plan, you would have to pay a tax fee. So I layered minimal essential coverages on a lot of people because it was cheaper to buy the MEC plan than it was to pay the penalty. I mean, these are high income earners. This is not somebody making 20,000, somebody making, 100,000. They don't want to pay the tax penalty. It was cheaper to pay this. So typically with the short term, and somebody asked, can you put this with a short term? Absolutely, you can put this with a short term. Is 100% coverage on the preventative drugs, birth control, and a couple others. They get their physicals covered, and it's $99. All right, that's all they want. Oh, what if they want to be able to go to the doctor a little bit or urgent care? All right, that's plan 3. It's $149. You can add an RX card to this. So MEC policies, again, a lot of companies have them. First Enrollment has one, USA Health has one. There's a few of them out there. They all typically cover the same way. The biggest issue I have seen is know your carrier or your hospital systems. Aurora does not play well with MEC policies. And the reason why is because when the fine print on these for the preventative services, it will say we will pay 100% for your colonoscopy if it's done in a standalone center and not billed through a hospital. Well, I found out because I had to have people in this, that in my area, even though we actually have a standalone building, that's all it's for, the bill is run through the hospital. And it took her about 6 months fighting with them and getting it and showing and having to deal with it. Eventually it was paid, but the consumer had to do some of the work. So, that's kind of the gap when it comes to the MEC policies. Let's see. Do you stack the MEC with USA Health? Does Allstate have a MEC? I honestly don't know if Allstate has a MEC. The MEC policy on USA Health, that might even be this one, actually. I like it. We'll talk about share plans in a bit. I don't like the share plan MEC that they have, because if you read the fine print, it actually says they won't cover doctors and critical illnesses and things unless you prove that you've been doing some of the preventative. So you got to read the small print. But most of the time with MEC, they're covering your preventatives and a few doctor visits. And then maybe you can add an RX copay. So relatively cheap, relatively inexpensive to layer this with a short term, to layer this with an indemnity plan. It's not a bad option, and it's less expensive than full price marketplace. How do I document to protect myself? I give them the fine print and I point out a couple of the things. Now you all have access to AI. It's all out there. Copilot, if you have Microsoft, you can pay for Chat GPT. It's like $12 a month. I don't know. I just paid for the whole year. You can take all of the fine print that, you know, on the documentation, copy and paste, copy it, paste it into the AI and say, find me the caveats, the restrictions, the limitations, all of those things, and it will give you a nice document. So you can give that to them too. But make sure you tell them you need to read the summary of benefits. But you need to show them some of those holes. That's how you're protecting yourself. Paige said she thought only the marketplace was MEC. No, the marketplace is, but it also has the 10 required things. There are some groups out there that are offering MEC policies that are not full major medical. It's a way for them to get away from the penalty. These plans came out so other people, individuals, could get not get penalized. So there are MEC plans. They're very limited. I mean, look at this one. It's preventative and some doctor visits and some labs. It's not covering surgery, treatments, hospitals. MEC policies are only for that prevention and potentially a PCP and urgent care. So again, if somebody, especially women, our annuals can cost more money if we're going to get more than just going into the doctor and having some labs. It's cheaper to buy this than to have a pap smear and an annual and a mammogram. And if you're a man and you're going to get, it's my time to get a colonoscopy, it's cheaper to have this than to try and pay out of pocket. So this is where you would layer those plans.
So Chris, would you put this plan possibly with like a high deductible short-term plan? So
Yes.
that they're protected top end, God forbid, but then all their
Correct.
preventative is. So
Yep,
keep the cost.
absolutely.
Okay. Thank you.
Yep. And I mean, you can see the rate. It's not much, you know. Somebody in their 60, 61 is like, yeah, let me, or 40s, or, you know, my annual is important. You can actually say, do you get your annual every year? You do? Okay, I have something that will pay for that. And then you got the one who's like, I think it was 10 years since I've had my annual. They're probably not going to suddenly get annuals. I'm not saying you shouldn't tell them to get an annual. You should. Number one thing you can do to help prevent bad things. But yeah. So
And Chris, you can write the MEC anytime during the year. This
yes.
is something you're using more if you're going to keep it for the 12 months, whereas in the last thing you talked about with the short term, you said maybe January, February, get all your tests done with ACA and then move over to the short term or whatever we're doing. So
Right.
Okay.
That's
gotcha.
and that usually was my plan when somebody has been on a short term for a while because they were willing to just kind of, okay, it's cheap. I don't go to the doctor. But now they're like, you know, I haven't had an annual. I want my annual, or I want to get my colonoscopy. It runs in the family. It was cheaper for them to go on the marketplace, pay the full price, get that mammogram, the colonoscopy, that pap smear all free, than trying to deal with the issue here. But you can do this. MEC policies are guaranteed issue, and you can do them anytime, even for children. So somebody shows up and they had a baby, they can get the preventative services for their children. I see it all the time. I swear at least once a month, there's somebody in Marketplace, Mastery or ACA Training Grounds or North American, some Facebook group going, oh, this woman that, you know, we have a baby and we can't get them in. Well, you can sign them up for a MEC and they can get their preventative. They can get those baby wellness checks. So yes, year-round guaranteed issue.
And the parent has to be on with the baby, correct?
Yes, it has to be a member and a child. There's not a child only.
Okay.
All right. Next one. Underwritten plans. This has become extremely popular in my office. So it's a full major plan with a large network. It works just like the marketplace plan, except they underwrite. So they're going to ask health questions. It's less expensive than the full major medical plan on the marketplace. And ironically, the max out of pocket is also less. So next year we're looking at, I've seen anything from $9,400 to the $10,650. And the indemnity plan, and the only one I know of, I know there's others, but the only one I know of is USA Health, not US Health. There's two different ones. USA Health that has an underwritten plan, and they're highest deductible one is 7,350, which is also the max out of pocket. And it has copay for regular doctors, specialists, chiropractor, urgent care, and some prescriptions. So it's a major medical plan. It's kind of, think of it as the old school one before the Affordable Care Act came out. Works just like traditional. People can sign up now and keep it until they turn 65. We have had some people that are higher income earners. So they're making 100,000, a couple of two. So this year they're getting a tax credit, but they're paying a lot. Single person's paying 800 on the marketplace, and I can put them on this plan for 675. So even if the tax credit comes back, they're like, you know what, I'm just going to stay with this. The nice thing about this plan is once you're in it, you're in it. So there's no exclusions for pre-existing, but they have to pass the underwriting. So it may start off at, don't quote me on exactly this number, but let's just say $679. That's kind of the base plan. You send them the information, they underwrite them, they look at their prescription history, and they may come back with, yep, works out. Or you know what, it's going to be 700. Well, 700 is still cheaper than the 800 they're paying on the marketplace. I have a couple that is signing up for this plan because between her and her husband's income, it's so fluctuating, and they hate the fact that they don't know what they're going to make. So even though the tax credit may come back, if they both get raises, they're going to end up paying more anyways. And they've got some lucrative investments that typically pay out. So, and it's QSERA. This is a QSERA qualified plan. He gets money for QSERA. So they're like, you know what, this is our plan. And we're going to stay in this until we're retired and our income is significantly less. Okay. It is a captive through USA Health plans. It is similar to LifeX. I don't know LifeX enough to, no, it's not similar to LifeX. Okay, they're adjacent. This is USA Health plans. You can get it through North American Insurance Services. You're not really captive. You can sell other things, but you have to be contracted with them. And you can sell this as a group as well, by the way. This can be a group product. And they do have to have an EIN number. So I discuss it with people and I say, do you have an EIN number? Especially if they're self-employed, like, oh, yes. If they don't, would you like to get an EIN number to qualify for this plan? And we can set it up for a trust fund. And then you can become a trust and use this EIN number. Yes, Jackie.
Sorry, just a quick question. You know that thing going around from like the Arizona Department of Insurance and how they're saying like you can't sell unqualified plans in this state? This is fine though, right? Like if it
Yes.
says it's available in that state, it is okay. It's not like we're doing anything unethical by selling a group plan to individuals.
Correct.
Okay.
The state is going to tell USA or whoever whether they're allowed to sell in that state, right? So if you go there and it says, yep, it's available in this state, you're fine. You're
Okay.
not doing anything wrong.
Okay, thank you.
Yes. But it is meant to be, towards self-employed or, I mean, you can make a free EIN on the government. We talk to people going, all right, it's going to be great for a trust. Like they're starting to think about retirement. It's like, you know what? You can take this EIN, go to the bank, set up a trust. You can set up I just found this out a couple days ago, a non-revocable funeral trust. So you can go put money into a trust account that is non-revocable. You cannot take it for anything other than the funeral. So if somebody's in a nursing home and the government, the state, they end up on Medicaid and they die, the state gets their money. Well, not this money. So you can set up a trust for that. So you don't necessarily have to be self-employed and, running a whole big business. It can be used for setting up trusts and stuff.
So wait, so this is like LifeX, this underwriting plan?
It is underwritten. Now, LifeX is different. With LifeX, you are becoming their consultant employee. This is partly why I don't like it. The USA Health, you're basically saying, I personally have an EIN and I'm joining this group with my EIN number. LifeX, you're saying, I'm going to be hired as a consultant to recruit for you, to have people as an agent, you're recruiting them to become part of the LifeX staff, and they have to fill out surveys, and there's a little bit they have to do. And then they get a tax form at the end of the year that says they were employed or, not a W-2. And again, I'm not 100% familiar with them because I just went, you know what? To me, this leaves too much vulnerability. What if somebody doesn't fill out that survey? Is this plan canceled? And now we're in the middle of the year and the survey thing went somewhere else. So that one, that one kind of scares me. And I would rather do the USA Health one than the LifeX. But
Because the US Health is you're not becoming an employee.
right, you're not becoming an employee and have to do anything with USA Health. You just
But
have
how
to have
are
an
they-
EIN.
How are they getting I thought that was illegal to have another major medical plan that wasn't marketplace. That was wasn't that the whole thing when they started out with, wasn't,
Correct. This is a group plan.
so
But
they,
you are a group, you're basically joining, you're not joining a group plan like LifeX. LifeX is a employer group plan. This
Got
is a
it.
different type. This is more like, the easiest way I can explain it is think of it like an association. And
Uh-huh.
association plans are allowed. So you are joining the association with your EIN. And now you can join. So that's why.
so do they pay an association fee?
It's
No.
part of the fee that's in the thing.
Okay, so this is a newer plan. I looked at this a while ago, but I'm so confused
They've
with
been
all the
around a
plans.
really long time. So it's not
They
really
have.
new. It's just they've become more popular in the last, obviously, 6 months.
Okay,
Again, on my YouTube channel from
Got it.
last year, towards the end of the year, I had some of these alternative plans and I had Jacob from USA Health on there and he explains
Okay.
it really well.
so one last question. Do these plans cover hospital? I had a friend who had one of these plans. I don't know if
They-
it was USA Health.
It was not USA Health.
Okay, because they
Or-
went to the hospital and had a $27,000 shock because they didn't
That was
cover.
US Health,
Okay,
which is an indemnity
they're
plan.
different. Okay,
This
okay.
is right there at the very top, full major medical.
Okay, thank you.
I'm going to show you what that looks like. Free preventative. It's just like your traditional health insurance.
And you
It's like
said
this.
Chris, you said if they do a trust, then that avoids probate. Is that correct? Protects them from probate, or is
Oh,
that
if,
just that
well,
non?
no, that's a different discussion, but yes, they should, that's a revocable trust. That's a probate thing that should be done with a lawyer. You can set up a non-revocable funeral trust, which helps with probate in a different way, but it says this money is set aside for the funeral.
Okay, thank
So
you.
that one's a pretty simple one. Now, this is just the ages 60 to 64, because that's just the demographic is typically who I'm working with, but you'll see the rate. I will tell you, this is not good for people that are low age-wise. It's $600 for somebody who's 25. They're not going to pay $600. It's cheaper on the marketplace. It's cheaper with the short term, but this is a pretty decent rate for people in their 50s to 64. The line at the bottom that says unlimited benefit. It's not $1 million and then they don't pay anymore. It's full major medical. If they go to the hospital, they have to pay the deductible and then it's covered 100%. It's a extremely awesome plan for those who are high income earners. Not talking the millions, but they make more and they can afford $1,280 a month for 2 people. They may already be paying close to that now, but it's cheaper than $2,000 on the marketplace.
And it's probably a bigger network.
It's a huge network. It's Cigna. It's the freaking country. So you have to be a doctor who doesn't want to be in the plan, I think. Now, I don't know about chiropractors, but you can, this is a great plan for somebody who travels a lot. It's not just emergencies. Yes, it would cover just emergencies if they happen to go to a clinic or a hospital that isn't in the network. But if they travel, I got somebody who's in Florida half the year and Wisconsin half the year, Arizona half the year, or, this is a huge network.
But even
Chris,
if you get a subsidy, it doesn't do you any good if you're on a network with these doctors.
You mean on the marketplace?
Yeah.
Right. If
Just-
you're on a marketplace plan, it's only going to cover network and emergencies. This plan
Right.
covers network, but it's countrywide, not
Right.
statewide.
But even if you're getting a subsidy, this might even be better because you're paying more. But if you're not getting your doctors on the ACA plan, it doesn't really matter.
Right.
Chris, I
Chris-
just had a quick question. If
Sure.
someone signs up for this plan, like, and then they move to another state where this plan isn't an option through USA Health Plans, do they have to cancel and sign up for something else, or can they keep it?
They can keep it.
Oh,
Nice.
You
Okay.
can't sell it if they're in that place. But if they bought it in Florida and I don't know, this is in most states, not all of them, then they can keep it.
okay, cool.
And that works the same. Just side note, Philadelphia American Gap. I asked about that because I have a company that pays for their employees, and
Mhm.
he's going to move to Utah, and it's not there, or California.
Right.
And they said, yep, if he buys it here, he can keep the Gap there too. So a lot of these indemnities, these all ancillaries, even if they're not allowed to be sold in the state they're moving to, they can still keep them once they move there.
Cool.
So this is the Cigna PPO. You can pick the deductible. We actually had a lady who come in here that my brother sold to, and they have a plan that has like a max out of pocket of $1,200. That's what she went with. And she's healthy, but she's like, I have the money, and you know what? If something happens to me, I don't want to have to deal with it. Okay. So I just show them this rate. I just took a snapshot, so it's not, teeny tiny print. It's a really good one. It's USA Health Plans, not US Health. There are two very different ones. You have to get it through North American. I don't know of anybody else who's selling it. Even if you sign up through, something, you'll get it. If you would like it, I can send you the link and you can sign up. It's really easy. Just let me know. Your E&O covers all of the plans we just talked about. These are all major medical. So,
Chris, this one
yes.
works though like an HMO for that network that you cannot go out and network at all with it. Is that correct?
you have to be in the network. Yeah, it doesn't have an out of network deductible,
Benefit. Okay.
but
Okay.
it's a huge network.
Okay.
So,
And if
And you
you're
have to be
caught
on-
out of state, whatever, you're in an emergency, you're in the hospital, and that hospital isn't in network, is it covered?
yes, they have to cover emergencies.
Okay.
So that part is still covering emergencies. Absolutely.
And you have to go, and is the underwriting that bad?
It's actually not bad. So there are some knockout questions. If you're pregnant, you're not going on this. If you are in cancer, right? If you have those major things, there's a reason the rates are what they are, because they take the statistics of healthy people and how many healthy people are going to have major things. Because once you're in it, you're in it. So you could have it and 6 months later get diagnosed with cancer. It's yours. You're in it. But yes, it's got, well, it's a couple pages long.
Okay, and then you could stack this with the MEC.
No, you don't need to. It has preventative for free. This is
Okay.
a major medical plan. But, things like the knockout questions, do you have, are you pregnant? But those are the knockout. Auto decline. Are you pregnant? Are you type 1 diabetic? Are you currently pending surgery or hospitalization? And are you confined to a nursing home or a hospital right now? Those are the ones that you absolutely are not going to get it. The other ones will, it might depend. Maybe you have liver disease, but you're fine. So you can fill it out. We've had people that have gone through it, and then prescriptions typically seems to be the thing that might kick them off. So it's not going to hurt to try, as I have told numerous people. It's not going to hurt to try it. If they don't, well, then we know the marketplace is the way to go. So I saw, Michelle, you sent me your email. I will send you this afterwards. Anyone else, put your email in there and I will send you. It's a very easy sign up. And it's pretty good. The replay, I know Joan, will be out there by Saturday. And I will send this email for the USA Health. It's really easy. I mean, and the customer service, pretty good. I mean, the guys like to answer questions. All right, next plan, because I want to get to it, and we're almost out of time, is the share plans. I know there's a lot of people who are anti-share plans. But again, is something better than nothing. There are different kinds of share plans. The one thing they all have in common is they don't cover pre-existing. Now, some of them don't cover it for 1 full year. And then they'll cover 25% of it year 2 and 50% year 3, and some of them it's like never. So pay attention, because that is going to be kind of critical. They can sign up to the age of 65. It is not health insurance, so you don't use terms like deductible. It's your share, your responsibility. There are a couple different ways of doing it, but they are usually significantly cheaper. But it's not insurance, But again, a lot of your consumers are okay with that as long as you tell them. So I've got 2 different ones I'm going to show you. There's a third one that I'm actually looking into that Peak Performance sells, if you're interested in. Again, you can let me know. That's Sedera, and I'm actually liking that one maybe more than this one. But this one is a share plan, and it's layered with a mech. So it's got a share plan that is preventative, primary care, specialist, mental health, surgery. We'll see where it says MRA under the surgery, 100% sharing after 2,750 MRA. MRA stands for member responsibility amount. So they're saying that we will pay anything beyond 2,750. But look at the top, covers pre-existing right away for preventative, primary care, specialist, urgent care. A single person who's 60, it's going to be $512. Well, that's cheaper than $697. But the one I want to point out as well is that Select Silver on the right, $2,750. This is just for major things. Treatment, surgery, emergency room, hospitalization. I did ask, it does cover physical therapy, and some of the doctor visits after a surgery. So it's not like, oh, I had shoulder surgery, but we're not going to pay for physical therapy. There is a limitation, it might be 12 visits or something. But you are paying $2,750 for your major medical issues, not the doctor's office stuff, not prescriptions. And $349 for one person, $604 for 2. So if you have somebody who cannot pay any of these other ones, get them this one. It's pretty self-explanatory. You are responsible for the first $2,750 of a surgery, outpatient treatment, emergency room, or hospital. Now, their MEC policy is the one that if you read the fine print, it does say things like they won't cover surgery or cancer if you weren't getting your annuals every year. So that's when I went, oh, I get it. They want you to get your annuals. So there is some limits on this specific one. There is Sedera through Peak, which I actually was like, oh, I'm very intrigued by that. They also are guaranteed issue. Doesn't mean they're going to pay for everything right away, but they start paying pretty quickly. So that's a different share plan. Again, very affordable. The other one that I like that I used, I talked about this last year, and again, look at the 2024 classes from last year towards the last month. I had somebody on specifically about this. It's called Redirect Health. There's your fixed dollar amounts. It's different because this is your first line of defense, not to call your doctor, to call their doctor. You will meet with a surgeon, a orthopedic, a skin care, whatever. You're going to see that specialist, and it costs you nothing. That's pretty cheap. If they say you need to go, they will make the appointment for you. They'll find somebody who works with them. And the rates, again, are pretty affordable, and they can stick with this. I also have sold this as a group plan. This one's a very good fit for somebody who doesn't really care where they go. Now, if they do care where they go, they're like, no, I have to have my doctor. They can talk to the Redirect people and say, this is the doctor I want to go to. Here's the reason why. And Redirect, after 48-hour authorization, will allow that. And then instead of being free, they have to pay $50. The max responsibility for outpatient surgeries, things like that, for an individual is $2,000. For a family is $4,000. The max out of pocket member responsibility for a single person is 4 and for a family is 6. So it's a really nice plan. Here's kind of the details. And I can send you that too. I'm probably just going to send it to everybody who's given me your email. You don't have to do it. If you don't want to do it, that's fine. I'm actually going to do this one for myself. This is going to be my January 1st. I've been told the only issue, because I asked for feedback from people who had it, was that one of the clinics refused to submit the bill. They just wouldn't send it in. And that has been the biggest. So then it's like getting the right billing, getting the right stuff, and then getting it to redirect for payment. But redirect's customer service, pretty phenomenal. All right. Whenever you add these, we're right at the end of the hour, you have to add the extra stuff. It's important to know about these extras. And also offer. Final expense, life insurance, short-term care, long-term care. If they tell you they're self-employed, you should be offering them disability. But this is the stuff that's going to protect them with any of these alternatives. At minimum, you should be offering accident coverage. So make sure, and we talk about these in numerous previous recordings. This is, and it's easy enough to show it. So here's one that's my major medical plan. I'm like, well, it'll cost you $18,332 on the marketplace. Or we're going to do a MEC policy, an indemnity policy, the plan enhancer, which is accident and in hospital, a critical illness. It's $1,079. Same person or same couple. Or I'm doing a share plan. Enhanced bill though, $788. Start experimenting now. It doesn't matter. Just kind of start looking and seeing what that is. And if you sell none of these, that's okay. I like to have them in the back of my brain because sometimes something will fit that may not have fit. And if you don't want to sell it, that's fine. Don't sell it. I just want you to know what these are because there's a lot of opinions out there. I will tell you the LifeX one is the one that scares me the most because what if they don't pay? What if they don't do that survey? Did they just lose their health insurance? Because now they're not doing what you, and you're not an agent with that. You are a recruiter for them. So just kind of that's the one that, scares me. But again, I have not dove into it really deep. If you think, no, that one sounds good and it works well, okay,
Christina,
do it.
can you switch or join any of these anytime? Because they're
Yep.
group plans, do you have to do an open enrollment?
Nope.
So if someone has a LifeX, they could switch, or if they're on a short term, they could switch, or if they're on a whatever, they can
Yes.
say, I want this now. So you can join the USA Health Plan right now.
Yep. In fact, I just had somebody, their income's going to go over right now this year. Not over, but she's taking more money out. She's like, you know what? Let's just start this for December. Okay. She's in the underwriting process right now. We'll see what they say. They come back. If it does come up, they have the right to say, no, I don't like that new rate. Okay, that's fine. They can do that. Or, yep, I'm in. And then I'm going to terminate her marketplace coverage as of December because she doesn't want to pay that full price and she doesn't need to.
And then these don't re-enroll as soon as you stay on it, that's it.
Once you're on it, you're on it. So keep a spreadsheet, and then in October, September, email those people or, do it in April. All right, you guys are on this new plan. Any questions? I'd like to know how it's working. And then in September, all right, you're going to start getting all those open enrollment emails. You liking it? Then you don't have to touch. It's just going to continue. So in some ways, I'm excited that I'm getting some people on these plans. Not the short term ends. But the
And short term has some gaps, right? I mean, you have to be careful there.
Yes, it's got limitations. It doesn't pay pre-existing, but like I said, the Pivot one that we just found out, and I don't know if it's all of them or it was just the Epic. They only paid $10,000 for joint surgery.
Oh, wow. Okay.
Yeah.
Now, do they, I know for the short term, they do the underwriting. When you actually put a claim in, you
well,
attest to this, how about this
No,
thing?
they don't do underwriting. United Healthcare does underwriting. They're the only ones who actually do underwriting. That's why it
Is
takes
United-
longer to get short-term under United Healthcare underwriting. Allstate will quickly do a prescription one. So I have had a couple people that they told me they were healthy. I put everything in, and then I got an email from Allstate saying no, but that's because they did a prescription one. But most of the time, they're expecting you to be telling them the truth. Allstate and Pivot, they will underwrite afterwards, after a
Yeah.
claim has been submitted. Then they
Right.
underwrite. So
That's
they do
when it's
underwrite, but
scary.
not beforehand.
Yeah, because then you can forget what hell's in your medical chart. But how about US Health, USA Health? Do they
They
do
do
it?
the underwriting ahead of time. That's why it's an underwritten plan. Once you're in it, you're in it.
Okay, they can't come back and say, sorry, this is not covered because this is pre-existing, even though you
Correct.
passed under, okay,
So,
okay.
Chris, would you say that recommend that United Healthcare is a better option than Allstate because they do the underwriting beforehand? So you and the client are better positioned and protected from that big surprise that maybe they didn't think about. You know what I'm saying? Like down the road.
I don't know if it's better. I do like the fact that it is, if they say they're in it, they're in it. I've never had somebody in United Healthcare have a medical condition, have something happen that they went, well, we're not paying that. That's a pre-existing. So that part is nice. I haven't had that a lot. I think I had that once with, I don't even know if I did with Pivot or Health, but I'm pretty, I make it very clear. If you're not telling me the truth, they're going to find out. I tell them they're going to underwrite you if something happens.
Yeah,
Chris?
I've been told they say that they don't cover, they discover.
There's some
That's
that
interesting
will help.
word.
Yeah, that's all. I think that's Pivot
That's Allstate.
or Allstate. Allstate's the one. They'll help
That's the one that's
discount, but
in.
they're not going to pay towards it, so you're getting the discounted rate.
Okay.
So I don't know if it's better. It's just different. I know name recognition. I don't have a problem when somebody shows up with the United Healthcare plan at a hospital. And Allstate, they're like, "Is this your car insurance?"
Car insurance.
Oh, right, car insurance. Or Pivot. I've never heard of Pivot, right? Of course, they never heard of Pivot. So
Chris,
Um,
we even
they never
found
give
out with
anything.
Allstate, well, John found out the pivot ones where it only covers up to so much for the neck joints. Allstate is actually 5,000, where pivot was 10.
right.
So that's even more scary on that Allstate.
Yeah. So it's
Gotta layer it.
all of the short terms do have something in there. So instead of you having to read 3 pages, ask them to send it, copy all 3 pages or 17 pages or whatever it is. Chat GPT, put it in and say, find me the limitations, find me the restrictions, find me the, to get this, you need to do that. So that is great. So
Can I ask on the USA Health plan? Sorry, you have to have a minimum of 2 because I have that contract, but it's only showing 2 to 9. You have to have
For-
2 people for
for what
that?
now?
For
What
the
was that?
USA Health plan?
For a group?
Well, the only thing I have I'm contracted, but I don't have that in Florida. It's not showing. All it shows is the group plan.
Okay, then you may not be able to sell the Cigna one there.
Oh, okay.
Yep.
All right.
All right. Anybody else? I think I got everyone's email. If you want something else, please let me know. My email is aca-academy@outlook.com. The YouTube channel is Coach Chris, and it's clearly me. There's a couple others that show up. They're clearly not me. One's a fitness guru, who's really not me. There are lots of options on there. Lots of videos from last year. I talked to individual carriers last year, Redirect, USA Health, right on there, and they talked you right through it. The people who sent me emails, I will send you Redirect, and I'll also send you USA Health. So, if you want one or both, you can.
And
If you
then
don't
where,
have Allstate, I can send you that too.
where can we find, like Jackie had an issue because of Florida, where can we find, or was it Virginia? Where can we find what states they're in?
On the website, I will send you the link to mine, and you
Okay,
can just pull down the state. You pull, like California is going to be limited. There's still some stuff, right? So you can. I'll
California's
send you
limited
the
with
link to mine.
everything.
It's really easy. You just click it, and you can see it.
Okay, thanks.
And it'll show you.
Christina, have you heard
Yes.
of direct primary care?
Yes, I love that concept. So for those who don't know what a direct primary care is, you're going to pay a doctor we'll just say $1,000 for a year, and they are now your person. And you go to them for everything, not hospital, not surgery, but you have them on call and you don't use health insurance. That share plan that I showed that covers hospital and emergencies and surgery only would be a brilliant combination with somebody who's going to go to direct primary care. They're like, no, you know what? I don't need insurance for my regular doctor visits. I'm going to pay to go to this direct primary care doctor and I'm going to see them. But the direct primary care isn't going to help them if they have a hospital or
Okay,
surgery.
so they would need hospital or surgery coverage?
Yep. So you could do a short term, you know, if they're younger, you could do that that hospital share plan, because it's not really, it's not covering pre-existing. So you're not going to get that because it's for those emergencies. And then you could put it with an indemnity plan, but again, indemnities, it's the out of pocket that's for hospital surgery that is kind of lacking.
Direct
Okay.
primary care sounds like concierge doctor. Is that what you're referring to?
Yep, same type of thing. Yep, it's that concierge where you're paying them and that's now your doctor.
Okay, and what is the average underwriting time for all these different ones in case somebody's up against a deadline with their employer or their ACA or something?
Well, right now it's relatively quick, 2-3 days. November 1st, you're gonna have to just assume it's a week to 2 weeks. I mean,
Okay.
United Healthcare right now, we put it in, they're underwritten like the next day, 2 days later. During open enrollment, it's a week because they're getting flooded. So it's typically 2 weeks is
Okay.
the max when it's open enrollment. Hopefully sooner, but
Okay.
just be aware that's, you know, open enrollment. Right now they're getting onesies and twosies and all of a sudden they're going to get hundreds. So,
Okay.
all right. Thank you very much, everybody. I appreciate it again. I'm always honored to have you spend an hour with me, and we're 15 minutes over. I will work to get this on the marketplace or on the YouTube channel so that it's there for those who missed it. Let me know. Questions come up. I'm always happy to help. Happy open enrollment, and look for my pictures for my Halloween costume because I got something stupidly funny. So I figured this year was not the year to take my Halloween costume serious. This is the year to make everybody laugh. So have fun, and I will see you in January, February. Thanks, everybody.
Thanks for all your help, Chris.